Right now, somewhere in Destin, there are two vacation rental owners in the same building. They have the same floor plan and they have the same view of that emerald green water. But here's the thing. One of them is going to net over 80 grand this year. The other, they're going to lose money every month, even though their property grosses more. Same building, same view, completely different outcome. The difference has nothing to do with luck. It comes down to 7 hidden costs that one owner saw coming and the other learned about after closing, when it was too late to negotiate and way too expensive to ignore. And here's why this matters now more than ever. Insurance premiums have climbed. Florida's new condo reserve laws have ended an era of artificially low HOA dues, and there are more rentals competing for the same guests than this market has ever seen. The margin for error has never been thinner. A deal that penciled out 5 years ago, it can lose money today. And the owners getting hurt are the ones who budgeted for the purchase price and nothing else. One of these hidden costs even involves a secret list maintained by Fannie Mae. Over 1,400 condos in Florida are already on it. You can't look it up, and it can quietly destroy the resale value of that condo that you're about to buy. So stay with me, because at the end, I'm going to give you 10 questions that I'd ask before buying any vacation rental in the Destin area. And number 3 on the list is one that almost no one asks. Hey everyone, what's up? It's Danny Wills Margliano with World Impact Real Estate, DestinPropertyExpert.com, and StayTimeVacations.com. If you're ready to invest or make a move down here, you can call, text, or email me. Let's make it happen. My wife, Michelle, and I, we're local realtors here on the Emerald Coast, and we've been helping people buy, sell, and invest from Panama City Beach over to Destin, 30A, Freeport, Fort Walton Beach since 2010. And here's what makes our perspective different. We own and operate a vacation rental management company, and I'm not guessing what these properties cost to run and own. I see the owner statements, I see the maintenance invoices, and I see what actually goes into each owner's bank account. Okay, so we're going to start off with the hidden cost that touches pretty much every other part of the investment. Hidden cost number 1, choosing the wrong management company. Because a management company doesn't just answer guest messages, it schedules the cleaners. They control your pricing, your occupancy, your reviews, your maintenance costs, and ultimately the condition of how your property looks and presents to your guests. So choosing one based only on commission rate is like hiring a pilot because he offered the cheapest ticket. The price matters. I'd also like to know whether he can actually fly the plane. Full service management typically charges somewhere between 15% and 28% of the gross revenue. And here's where people get it wrong. They compare a 15% company to a 28% company and think they found a bargain without even asking what gets billed. Is photography included? Listing setup, credit card processing, linens, guest supplies, inspections, maintenance, and it goes on and on. There's a lot of things that they can get charged for. So the commission is just the cover charge. You need to know what happens after you walk through the door. And ask this question, because almost nobody does. Is your commission calculated on gross revenue or net? 25 of gross and 25 of net are two very different numbers, and they're going to really shock you, and you don't want to have that shock if it's going to be during your first statement. So find out up front. You also need to know who and how the pricing is controlled. Does the company actively adjust rates based on demand, events, booking pace? Or does the property just sit on autopilot and the calendar looks a little empty, so they give a discount? Because discounting fills nights, but reckless discounting is like drilling holes in the bottom of a boat to make it sit lower in the water. It temporarily masks the visible problem, but after a little while, it's just going to sink. Before you sign anything, ask for a sample owner statement, the complete fee schedule in writing, who performs inspections, how maintenance gets approved, how damage claims are handled, and how easily you can get out of the contract. Most importantly, ask for a projection of what the owner actually receives, not what the property might gross. If a company won't show you that number, it tells you something. Hidden cost number 2. Insurance is not just the premium. Most buyers know coastal insurance can be expensive. The average Florida homeowner pays around $4,400 a year, okay? And a dedicated short-term rental policy on the beach can run anywhere between $2,000 and $9,000 or more. But the premium is just the easy part. Start with the hurricane deductible because this number shocks people. In Florida, it's usually not a flat dollar amount. It's a percentage of your dwelling coverage, and it's typically 2, 5, or 10%. On a home insured for $400,000, which is not much around here, a 2% deductible means $8,000 out of your pocket before the insurance pays a dime. And I've heard of Emerald Coast beach houses where 5% named short-term deductible worked out to be $60,000 in owner exposure on a single claim. That's not a footnote. That belongs in your analysis right up top. Then there's the gap that kills more rental property owners than any storm. Buying a property, insuring it on a standard homeowner's insurance policy or a second home policy. Then they list it on Airbnb. They don't tell anyone. Nothing goes wrong 2 or 3 years. Now something happens, a big claim. They go to file. That policy was never built for commercial use, and it can fail exactly the moment you need it. Also ask about loss of rental coverage. Losing the building for repairs is painful. Losing the income while you keep paying on the mortgage, HOA, and utilities, well, that can break people. And flood, well, that's its own conversation because standard policies exclude rising water and storm surge. And flood risk is property specific. The bottom line is to get real quotes before closing from an agent who actually writes short-term rental policies on this coast and treat that quote like an inspection report. It's a part of deciding whether the deal works out or not. Hidden cost number 3. HOA dues are the menu price. Assessments are the market price. If you're buying a condo, this might be the most important part of this video because the rules changed and a lot of buyers haven't caught up. Buyers see the monthly dues, plug them into a spreadsheet and move on. But the dues only tell you what the association is collecting today, not what the building needs tomorrow. After the Surfside collapse, Florida passed structural safety laws. Condo buildings 3 stories and taller, they must complete a milestone structural inspection if it's at least 25 years or older and they're near the coastline, plus a structural integrity reserve study that quantifies exactly what the roof, load-bearing walls, waterproofing, plumbing, electrical, and other maintenance items are going to cost and when. What this does is it helps to plan for the future, and it's going to hopefully alleviate special assessments, or really, I guess maybe not alleviate them, but make them to a minimum in the future. All this stuff, it's a really good thing for the future. Those deadlines have largely passed, and here's the part that matters for your wallet. Associations, they can no longer waive or underfund reserves for critical structural components the way they used to do for decades. The era of keeping HOA dues artificially low by kicking the can down the road, it's legally over. And buildings that spent 30 years not saving for a new roof and making up the difference is the only way they can is through higher dues and special assessments. And that's not what we want. And this brings me to that little secret list because these two things are directly correlated. Fannie Mae maintains a list of condo projects ineligible for financing, and this is over 1,400 Florida buildings that are already on it. Now, the milestone inspection itself, it doesn't put a condo on that list, but ignoring what the milestone inspection finds, well, that will put a building on the list. When an engineer documents critical repairs and the association doesn't fix them or fund them, that finding is now sitting in the association's records. It surfaces on the lender's condo questionnaire every time someone tries to buy a unit, and buildings with unresolved critical repairs or insufficient insurance get flagged as unavailable. Think of it this way: the state law is the doctor's exam. The Fannie Mae list is what happens when the building skips the treatment. Don't stop at asking whether there are any special assessments right now. Ask whether there's been special assessments that have been discussed, whether the new milestone inspection is complete and what it found, whether reserves are keeping pace with the reserve study, and whether the master insurance cost has jumped, and whether any repairs have been kind of quietly delayed. Because Florida associations with 25 or more units now have to post their budgets and reserve studies online, so the information exists. You just have to read it or work with someone who will. You find a condo that's priced below the identical unit down the beach. Well, it sometimes is a great opportunity. And sometimes the discount, well, it's not really a gift. You need to make sure there's no one's hiding anything, and now you know exactly how to look. Are you thinking about relocating to the Emerald Coast of Florida? I've got just the thing for you. My team and I have actually taken the time to create the ultimate relocation guide, which is meant to save you hours of research. And I've linked it right below. From top employers to the best hospitals and a boatload of other stuff that you really need to know before making the move. The best part is this guide is 100% free. That's right, you heard it right, 100% free. Just click on the link in the description or in the top pinned comment. I hope this helps. Hidden cost number 4. The Gulf is beautiful and it's hard-on properties. People pay a premium here to be near the Gulf. Unfortunately, salt is like an invisible tenant who never checks out. It touches everything. It pays no rent, and it leaves maintenance behind everywhere it goes. Now, their guest turnover on top of that. A sofa in a personal vacation home gets used by one family a few weeks in a year. A sofa in a well-booked Destin rental hosts dozens of families every year. Now, that's not residential use anymore. That's hospitality use. And hospitality use requires a hospitality budget. A replacement reserved for furniture, mattresses, linens, appliances, TVs, floorings, HVAC, all of this, okay? It needs to go on a countdown timer the day guests start arriving. A property can look profitable on paper while it slowly consumes its own furniture. Then the big refresh comes due, and the owner discovers that several years of what felt like cash flow really belonged to the next air conditioning unit all along. So it's important to set that line item for replacement items and maintenance on that spreadsheet when you're figuring out your numbers. Hidden cost number 5, turnovers, utilities, and the thousands of small little items. There's a category of expenses that never feels dangerous because every charge looks tiny, like trash bags, a replacement coffee maker, batteries, another set of towels, a plumber's service call, a higher summer electric bill. Individually, these are raindrops. Over a full year, they're a downpour. Guests don't use utilities the way owners do. They crank down that thermostat down to 60. They wash load after load of single towels. They leave sliders open with the AC blasting because they're on vacation. And you know what? Let's have some air conditioning while we sit on that balcony. It's not their bill. It's not their problem. Get very clear on how cleaning flows through your owner statement, because even when the guest pays for the cleaning fee, that doesn't mean that every cleaning related cost passes through without touching you, such as deep cleans, linen programs, restocking different cleaning supplies. and the cleaning for your own stays. They all land on your side of the ledger. Hidden cost number 6, seasonality and owner use. A Destin rental calendar looks fantastic in June and July. And the danger is treating summer like it represents the whole year, because it absolutely does not. This is exactly why owners who build their own projections on summer numbers get blindsided in February. The properties that stay profitable were those that bought, priced, and marketed with the whole calendar in mind, not just spring break and summer. Now, owner use, because this is where investors that quietly sabotage their own numbers. The weeks that your family most wants to be at the beach are the same weeks that guests pay high rates and the highest rates of the year. So that doesn't mean that you never get to use your vacation home, but owner use has real cost, even though no money leaves your checking account. Economists call it the opportunity cost. I call it eating the seed of the corn. So build your owner use into the projection before you buy. Don't project full peak season income and then block off the 4th of July week after closing and expect the projections to survive. Or after doing that, blaming the property manager. A vacation home can either serve your family and your investment goals, but those two goals have to share the calendar and share it honestly. Hidden cost number 7, compliance, rental rules, and paperwork. The final hidden cost is assuming that short-term rental operation is just automatic. First, you need to understand where you actually are, because this trips people up constantly. Destin proper is in Okaloosa County, okay? And it follows the city of Destin rules. Miramar Beach, where most visitors think of as Destin, it's actually a different county. It's Walton County, with completely different registration, tax rates, and requirements. Two different properties. They're a couple miles apart, but they live entirely under two different rule books. Inside the city of Destin, single-family homes, condos, and townhomes running as short-term rental properties, they must register with the city of Destin each year, and they have to pay a fee of around $500 for their short-term rental license. And it's actively enforced, okay, so don't try to skip out. There are also occupancy limits, generally 2 adults per bedroom, plus 4 more people, and a required sign posted on the property with the responsible party's contact information. On top of that, you need your state vacation rental license through the DBPR and the state and county registrations. Then comes the layer people forget, the Condo Association or HOA. Think of the rental approval as the door with multiple locks. Zoning opens up first, city registration the second, state licensing the third, and the association documents can still keep that door bolted shut through minimum stays, rental caps, or just outright restrictions. Never rely on the listing remarks. Ask for documentation, read the rental provisions, verify the minimal stay, and find out whether rule changes are being discussed at the board level meetings right now. The things I've just mentioned, they're not meant to scare you away. They're meant here for you to understand and so you don't make a mistake. But typically, the best news is that hopefully your rental property management company, they probably will handle all of these. So the thing that I mentioned just right here, they're not meant to scare you away. They're here for you to understand and not to make a mistake. But typically the best news of all is hopefully that your vacation property management company, they'll handle all this legal work for you. So find that out. The real formula, okay? If you remember one thing from this video, make it this. The most important number is not the gross revenue, occupancy, or the nightly rate. It's what remains after the property has paid everyone else standing between the guest credit card and your bank account. the manager, the association, the insurance company, the utilities, the vendors, the tax authorities, and of course, the property itself. Gross revenue is the finished story. Net income is what actually ends up in the cooler. Before buying any vacation rental properties in the Destin area, here are my 10 questions that I mentioned from the beginning. 1. What can this property realistically gross based on comparable performance, not the best year the agent can find? 2. What does the owner realistically net after everything? 3. Ask what costs are excluded from the projection that you've just been shown. 4. What will the management charge beyond the advertised commission? And is it on gross or net? 5. What are the real insurance premiums and deductibles for my intended use in actual dollars? 6. Where does the association stand on inspections and reserves? And can this building get or pass conventional financing? But just remember, if it can't get conventional financing, it's not the end of the world, okay? But just be prepared and understand what that means. 7. What capital improvements will this property need in the near future or next 5 years? 8. What are the actual rental restrictions from the city, county, state, and association? 9. How much prime season owner use am I planning, and what does it really cost me? 10. How much cash should stay in reserve so that one bad month doesn't really become a crisis? Alright, here's my rule of thumb. If one expense that's missing destroys the whole deal, the deal was too fragile in the beginning. A good investment shouldn't depend on a perfect weather day, perfect occupancy, and every projection landing exactly right. It needs breathing room, so plan for that. Destin could be an excellent place to own a vacation rental. I believe that. Michelle and I, we own and operate 2 of our own vacation rentals here. But the happiest owners on this coast aren't the ones who bought the biggest or found the thing that's going to gross the most revenue. Okay? They're the ones who understood what they were buying. They knew what it cost. They chose the right management company and strategy, and they kept enough in reserves to handle surprises without panicking. If you're considering a Destin condo, a beach house, or a vacation rental, you can call, text, or email me. My info is right here on the screen. Michelle and I will help you evaluate the property, the association documents, the rental strategy, and the questions to take to your insurance agent, your lender, and your accountant or CPA, because the time to find hidden costs is before you own them. We will also answer all those questions that I just asked and told you to ask a minute ago. Okay, make sure to watch our next video, Destin Vacation Rental Management Companies. It's going to be about the 12 questions to ask before signing a contract, because the wrong property, it can cost you money once. The wrong management company, it'll cost you money every single day. I'm Danny Wills Margliano with World Impact Real Estate, DestinPropertyExpert.com, and StayTimeVacations.com. Thanks for watching. Make sure to hit that thumbs up and like this video, and subscribe so you can see more of the upcoming videos we post every week. I'll see you on the next one.